Hi everyone, this is a short screencast for Independent Colleges Dublin for F6 Taxation and the mock exam May 15. And this particular screencast covers question 5, which is company residence, and quite a few tricky little areas within here. So part A here, just really sort of an element of rote learning here, and a company being tax resident in Ireland. And do remember and remind yourself that this is a pretty topical area. Certainly the CT regime within Ireland has changed dramatically over the last sort of 6 to 8 months with the new Finance Act in December 2014, and some new rules included in the F6 syllabus, which I think that we need to learn and we need to be familiar with. So really, what are those new rules and how is a company going to be tax resident in Ireland from this Finance Act onwards? This particular part here just really gives us a list of income, and I think probably at least one of these areas, if not two, is not strictly speaking a F6 relevant or within the F6 syllabus, but I'm going to take you through it anyway. What it's asking us is that where we have a company that is distinctly tax resident in France and it has these sorts of income, well, how do we deal with them? The requirements, as we say here, are just simply, what is chargeable to tax in Ireland, and if it is chargeable, then what type of taxation is relevant in this in the particular case? Okay, so just looking at the first part here, then the tax resident issue. As I said, a fair amount of rote learning for us to do here. First point, or first sort of set of marks that we're going to score, is really just this area of, this incorporation test. In other words, if we have an Irish incorporated company, it's going to be certainly Ireland resident unless the central management control is exercised outside of Ireland. So that's really the basic incorporation test. If you're incorporated, then you're resident, subject to obviously management control being exercised elsewhere. Okay. Now, just to twist on this, in terms of a company that is managed and controlled outside of Ireland, so we're talking about an Irish incorporated company managed and controls elsewhere. If it's not resident, in other words, if it's a what we call a stateless company, so it's Irish incorporated, managed and controlled outside Ireland, but is not tax resident elsewhere, then it is also going to be deemed as resident in Ireland. So that's a sort of one of the catch-all inclusions. In addition, where we have a company that is not incorporated in Ireland, will be resident if the central management and control is in Ireland. Okay, so 3 key points there for us to note, much of them, or most of which centers around this idea of incorporation and indeed management and control. So those phrases have got to be familiar to you. Okay, now this issue of management and control, really a long list here, any 5 that we needed, but you can see that they're fairly straightforward. Where is a company managed control? Well, where the directors' meetings are held, and certainly, perhaps where the directors reside, shareholders' meetings, negotiation of contracts. I'm not going to take you through each one, but do remember that it's not just the idea of directors' meetings. It could be a multitude of different things, even as far as where the company's bank account is held. And this really is trying to capture as many companies and indeed individuals as possible. It's a very, very wide-ranging definition. So I would suggest that we know at least 5 of these, and they're not too difficult to sort of remember. Just remember that word meetings, obviously bank accounts, major negotiation contracts, etc. Okay, so good thing to rote learn there. Now, the second part of the question, as mentioned, is just basically a multitude of different types of income. And as I've said, I think at least 1, if not 2, is not strictly relevant to the F6 syllabus, but I will take you through them. You'll see that we've got income from trading in France, we've got branch income, we've got some gains on sales of various items, and indeed dividends. So if we look at the answer itself, we'll see that in the first instance, that this company, which is resident in France, is certainly going to be liable on the profits of a branch in Ireland. In the same way that it would be in reverse. If an Irish resident company had a branch elsewhere, that branch is in effect an extension of the Irish entity, and therefore those profits or indeed losses would be added into the Irish company's income. So this is just the reverse. We have a company that's resident overseas in France, and it's certainly going to be subject to corporation tax on the profits of its Irish branch. Okay. I.e. its permanent establishment. And that may well be sort of a DTR issue for the company itself in France, whereby any corporation tax paid in Ireland could be included within the French CT comp. Okay. This next point here I don't think is F6 relevant. It talks about the disposal of shares being subject to capital gains tax and the participation exemption. Particularly the participation exemption is not part of the F6 syllabus. So if we can remember that, great. If we can't, I don't think it's the end of the world. Okay. Development land, again, a popular, quirky little area. It's a specified asset, so it has to be subject to capital gains tax in Ireland. The revenue won't allow disposals of Irish development land, certainly not being taxed, but certainly not being taxed to the CGT rate, 33%. Okay. Irish source dividends won't be taxed in Ireland. If you think about it, we have a company that has income, they're resident abroad, or indeed in France. They have Irish dividend income. They're not going to be taxed on that Irish dividend income in any Irish CT comp. Now, the French trading income, obviously, that's income that is derived in France. It's a separate entity that is, in effect, resident overseas. That income cannot be taxed in Ireland because this particular company is not resident in Ireland. Okay. So those are the key points in relation to this particular question on residency. A certain amount of rote learning required, a list of items there that make up that central management and control, and just be familiar with those terms of, the incorporation test and that whole area of central management control. And, watch for stateless companies that in effect aren't resident anywhere else. Perhaps they're managed and controlled outside Ireland, but if they're incorporated in Ireland, well, certainly they'll be resident within Ireland. Okay, hopefully that's been helpful. Many thanks.